Good afternoon, everyone. I'm Doug Grant, one of the partners at Insurance-Canada.ca. I hope that all of you are safe and healthy and are doing your personal part to prevent the spread of the coronavirus. We all thank you for doing your part also as an essential service. This afternoon, in conjunction with Aviva Canada, it is our pleasure to be bringing you this webinar, Improving Auto Claims with Real-Time Analytics. Most insurance and related businesses have made major investments in the past decade to replace and extend their core systems. Much of this effort has thus far addressed internal efficiencies and continues to do more. Over the last decade and more, there have been major developments in the field of advanced analytics. These tools, combined with a growing amount of data and a focus on data quality, have enabled new approaches to long-standing practices and traditions. Today's webinar addresses a particular function, the process of determining whether a damaged vehicle should be repaired or consigned to salvage. Our speakers, the subject matter experts, are Dorothy Comer, Daryl McGrattan, and Jonathan Spinner, all from Aviva Canada. To those of you who have joined in, thank you for your interest and for attending. Before we begin, a few administrative details. As you are listening, should you have any questions you would like to address to our speakers, please enter them into the questions box on the control panel. Following the presentations, I will present questions you have asked to a member of the Aviva team. I may even add a comment or two along the way. We are recording the webinar, and we'll send out a note to you and to those who are unable to attend with a link to the recording in the next couple of days. A couple of comments before we get to the presentation. We in insurance are on a digital journey which has gone through a rapid succession of phases in the last decade or so. Digital transformation, innovation, insurtech, platforms, digital ecosystems. Although there are different paths along which to progress, each of those phases is to some extent predicated on the previous ones. I look forward to hearing more from our speakers about this case study example of another step taken along this transformation journey. I would also note here that this use of technology was submitted by the Aviva team as a nomination for the Insurance Canada Technology Awards late last fall. The jury not only included it in the list of finalists, but at the Insurance Canada Technology Conference at the end of February, 5 weeks ago, it was announced as the winner. Hats off to the team. Now, on to the presentation. Jonathan Spinner is an Assistant Vice President of Claims Transformation and Strategy. As his title suggests, he is charged with bringing the business operations and technology delivery teams together to execute successfully on meaningful transformational change. On that note, Jonathan, over to you to introduce the presentation and the speakers.
Thanks very much, Doug. Happy to be here, happy to be able to share this story with more of the community, more of the industry. It's been a great journey, a great example of collaboration, and I hope that you guys appreciate what we were able to do and how we did it. So jumping right in, very quick introductions. So I'm Jonathan Spinner. Doug was very kind in his introduction. My title has changed as quickly as the technology has, so I am now the AVP of Claims Innovation. Really just a rebranding of the same job to indicate that we feel internally like we've moved past the finite boundaries of a transformation, and now we're in a continuous improvement model that we're dubbing innovation. So my job, as Doug said, is really to bridge between the needs of the business and the capabilities of technology to make sure that we're gaining the most advantage we can from the technologies available to us, and that we have our eye set on the horizon to find the technology that will really help us accelerate and innovate to deliver a better experience for our customers and the staff that works for us. So Daryl, do you want to introduce yourself?
Sure, thanks, Jonathan. So my name is Daryl McGrattan. I'm the lead for product analytics and delivery with the National Auto Claims team. And essentially, I'm the bridge from the auto claims department and the operation, and working with Jonathan's team and Dorothy's team and other areas of the business to help deliver innovation that meets our customer needs, that helps solve customer problems, and delivers efficiencies for both our people and the business. I've been in auto claims for the better part of 12 years, mainly in operational roles. So that's just a little bit about myself.
And Dorothy?
Hi, everyone. So I'm Dorothy Comer, AVP of Data Science and Analytics. So we are a team that is bringing data scientists, actuaries, and software engineers together to try and use data, software, and machine learning to power some of the innovation within our business. So we're working with teams like the claims innovation team, but also other areas of the business to try and really move the needle in the way that we can use data for insights.
Excellent. Thanks, guys. So moving on to a little bit of context as to why we're really here. And I'll start with something that really sets the tone for what life is like in claims at an insurance carrier. And it's essentially that we have an unwilling customer. Nobody has ever purchased insurance, desperately hoping for that opportunity to one day use it. It still is one of those grudge purchases that you're legally mandated to be insured in order to drive, and you cross your fingers, honestly, that you never have to endure the pain and suffering that is the anecdotal auto claim experience. So that's really the environment in which we operate. There are about 10% of our customers who do have the unfortunate need to use the auto insurance product that they bought, and auto claims can be really stressful. Historically, what makes it worse, not just the stress and the shock of having been in a collision, whether at fault or not, is that there's this weird unknown that happens, especially in the early part of the claim, where it's really uncertain what's going to happen, and uncertainty primarily rooted in what's going to happen to my car. That's primarily a huge concern for those who aren't dealing with bigger concerns like injury and potentially even death. But when it comes to the vehicle damage itself, not knowing if I'm all of a sudden going to have to find a way to afford a new car, or if I'm going to have to be out of my car for a protracted period of time. So that historically for us has been a huge challenge, and I think Daryl's going to go into a little bit about that customer or that business challenge. Daryl?
Yeah, so as Jonathan mentioned, that unknown after you're involved in an accident, a customer's involved in an accident, really drives anxiety and dissatisfaction for the customer. And it takes insurance companies a fairly long time to make a decision around, is that vehicle repairable, or is it going to be a total loss and we're going to reimburse you for the value of that vehicle. And for as long as I've worked in the industry, total loss vehicle claims have been probably the most difficult ones for our customers, the most difficult situations. They're the hardest ones for our adjusters to handle. They're the most fearful ones for our adjusters to handle. And they cost our business the most money, the most financial outcome from an auto claim perspective. They're the lowest scoring claims when we get customer surveys back. They drive a fair number of complaints, disproportionate number of complaints, usually around value, but also around time and contact. Automobiles are typically the second biggest purchase that a customer will make. And people invest a lot of time and they need them to get to and from work. I know not right now, most people are working from home, but in regular times they need them as a vital part of their life. Over 20% of our claims across the country result in a total loss. So 1 in 5 customers that have a claim, an auto claim, will go through this total loss process. And it accounts for about 55% of our indemnity spend. So there's a disproportionate amount of financial spend on those claims. And it's really impacted by slow decision making, like I've already mentioned, limited capacity for both our appraisers and our adjusters. The systems are fragmented in an auto space, and you have more than likely your newest people working in your auto claims team. So their capability to deal with these situations isn't always the strongest. and it all leads to dissatisfaction for our customer. So we looked at this and we said, how can we fix this? What are we going to do to make these claims better? How can we help our customers have a better experience? How do we help our adjusters upskill them to deal with these claims? And then how do we impact the finances on the back end? And at Aviva, we always focus on if we feel that we can solve a customer problem, usually that means that the finances will work themselves out on the back end. So this all started as a customer problem. And when we looked at it, our total loss claims, we spent a lot of time trying to brainstorm, how do we fix this? Traditionally, we look at the people, the adjusters. How do we upskill the adjuster? How do we make them do things quicker? How do we make them make faster decisions? Do we retrain them? And we spent probably hundreds and possibly thousands of hours retraining them over the years on total loss claims. But they never really had the biggest impact that we could. And you can see on the slide in front of us, this is just a sample of a historical claim. You can see the delays in decision making. So typically it takes about 5 days for a claim to get reported to us. It then takes us about 18 days to make a total loss offer after that. And it causes a lot of effort. So you can see the adjusters touching the file a bunch of times, 6 touches. We send out an appraiser. They then touch the file a lot to understand, is it repairable, is it not repairable? Once it's not repairable, they make a valuation decision. And it drives a lot of effort for our customers. So this really has an impact on the finances, on our people, and on the customer. And it takes a long time for us to make that decision and connect with the customer. But when we started to listen to what the customer and understand what mattered to them, they wanted to be taken care of quickly. They wanted the anxiety removed around, is my vehicle repairable or not? And they wanted to be put as best as possible back in the position they were prior to the accident. So we looked at things differently, and we said, if we got all the information that we could, is there a way that we could make a decision at F&OL, at first notice of loss with the customer, and make a decision that vehicle's a total loss? And that's when we brought in Jonathan and Dorothy to help with that using analytics. So I'll hand it back to Jonathan.
Thanks, Daryl. Yeah, so in terms of the approach that we took to solving this problem, and clearly not a simple problem, so therefore likely not a simple solution, but we did want a solution that hit on a number of criteria. First and foremost, we wanted a solution that worked seamlessly in the adjuster's work. So our adjusters work in Guidewire Claim Center. That is their operating system that they're in all day, every day. What we wanted was an embedded solution that felt like a natural extension of the tools that they were already using. We didn't want to have to divert them to some other calculator on their desktop or some website where they would have to copy and paste information. This had to be an embedded experience in order for it to be seamless and easy to use and intuitive, but also to garner the adoption and the buy-in of the staff that it was, one extra click or looking at a different portion of the screen, as opposed to something that required them to actually change context, change application, because those we felt would be a point of friction or a barrier to getting the adoption that we needed. Next, we wanted to make sure that what we were delivering to the adjuster was really delivered as a real-time decision support capability. What we didn't want was it to be based on yesterday's data or something that runs in batch overnight. This really needed to be something where in the moment, in the conversation with the customer on the phone or through another channel, that they would be able to request and receive a real decision or a real recommendation from the technology while they're having that conversation with the customer. Third, we wanted to make sure that we were taking best advantage of the modern techniques evolving in the data science practice. So predictive analytics and modeling, machine learning techniques and tools, and really embracing that technology and using it to deliver better outcomes. And finally, what we really wanted was for the solution to be able to give us the ability to set realistic expectations with our customer, while at the same time reducing the claim lifecycle and therefore the claim costs. So really, point D is that very simple concept of a win-win. We really wanted to get better outcomes internally and for our customer. So I'm going to start with the first two. So from an embedded experience perspective, we looked at where it made sense to put this new capability inside of our Guidewire Claim Center environment. And what we decided was that right on the vehicle incident, as the adjuster is collecting details about the damage description, that was a logical and effective place to put the total loss calculation invocation button and screen design elements, so that it was in a natural flow of the conversation that the adjuster is having. By this point in the claim where you're entering the damage description, you've already captured everything else that's required in order for the data to be complete for the call to the analytics service. So this made perfect sense as a way to put it right in the experience that the adjuster is already using. Next, in terms of providing a real-time decision support, it really is as simple as a click of a button. So we put an explicit calculate button right into the screen, and what comes back is summary level information, not too much, not too overwhelming, but also very telling for the adjuster to be able to see what the estimate coming back from the tool is in terms of what a total loss settlement would likely be versus a repair estimate. And as I've highlighted in the red box there, it doesn't leave it to the adjuster to interpret those numbers or to decide sort of what falls at one extreme or the other or somewhere in between. It really is very clear in making an actionable recommendation around that decision. So in this case, the tool has recommended a repairable vehicle. I will hand it over to Dorothy to take us through C, which is really about the application of analytic practices. Dorothy?
Thanks, Jonathan. So in order to make all of this happen behind the scenes, there were two different technology challenges that we needed to solve for. So the first was to rethink the way that we deliver our machine learning solutions to our frontline systems. So like most insurance companies, Aviva's been building statistical models for many years, but the way that we've been able to integrate those with our systems, we've had very defined entry points and very limited ability to flex in that. So with the introduction of a new data science capability and a number of different machine learning processes, we needed to introduce a whole new infrastructure, something that was more modern, something that was more flexible, and could really be integrated with our frontline systems. So bringing together data scientists and software engineers, we developed the concept of machine learning as a service. So what this does is it allows us to deploy a machine learning model into our production systems as an API. And that this way, it can be accessed from any of our frontline systems directly. So in the case of our total loss tool, that means that as soon as an accident happens and an adjuster collects the information about a claim, we can fire off a request to our total loss service and get a response in real time. And so that has dramatically impacted the experience of the client because they can get a response from our claims adjusters right away. Next slide, please, Jonathan. So the second challenge was really building the right predictive solution. So more than anything, what we learned from this is how important it is to know both your business and your data extremely well. So in order to do that, we took an immersive approach. We had our data science team spend many hours working directly with our claims team to understand our total loss process end to end. And so what that meant was they were able to understand the nuances of that process and how that actually impacted the data underneath. So our first goal was to make sure we correctly captured what we needed to predict for both the repair scenario and the total loss scenario. So as an example, we understood that repair costs included things like repair fees, car rental costs, and towing fees. But there were details within our process that helped us explain the conditions that might make any one of these much higher or lower than average, and we're able to build that into either our model or our API. One of the biggest challenges was actually predicting the repair costs based on the damage information and the way that our staff is allowed to enter that into our system. So as you saw in the previous slide of Jonathan's in the Guidewire system, they have a defined way to enter that data. And it wasn't as easy to interpret that from the machine learning model. So by sitting with the business, we were able to get a good understanding of the guidelines they use to enter that information. And we were able to use feature engineering to create new features that would better reflect the actual damage to the vehicle in a way that could be more accurately interpreted by the model. So that led to some very good outcomes, which I think Dara will let us know about.
Thanks, Dorothy. So once the models were built and it was integrated in the Claim Center, we're now able to use this at the first notice of loss with our customers, and it's had a significant impact. So on the previous slide, you would see the customer life cycle, I believe, was something around 31 days. It was a significant investment in time, effort from a customer. We're now able to do that within 3 days, and that includes make the decision if your vehicle is repairable or not, and where it's not repairable, get a valuation for you, discuss that valuation with you at first notice of loss and during that first phone call, make settlement and pay you in the same day. So this has a significant impact not only on the customer satisfaction, but reducing extra financial costs on the claim and reducing effort for all parties.
Great. Thanks, Charles. So that's a good summary of the customer impact and the benefit from an effort perspective for both the customer and the adjuster alike. What's great is that it also translates into the financials. What we saw, so what you saw in the last, in those two slides from Daryl were indicative cases that were traced. Now I'm going to talk a little bit about the averages that we've seen coming out the other side of this exercise. So what we're seeing now is that on those that have gone through the tool, we're seeing relative to the historical norm about $266 average savings per claim on the rental. And we're seeing about $300 on average saved in storage. Those are both a factor of an average reduction of 15 days on the total loss life cycle reduction from a customer perspective. So that's from reporting the loss right through to being effectively being paid out for the residual value of the vehicle. So 15-day reduction on these claims is massive, and that's really why you're seeing the NPS go the way it has, which is a fantastic improvement. When you think about what it takes to get 1 or 2 points of improvement in NPS to see on average a 16-point improvement, so that we've really hit on something that has resonated well with our customers. What's great is that this is coming at a cost reduction from a carrier perspective. So back to where I said we were in pursuit of that holy grail of a win-win situation, what we've found is that it is in fact possible, and it is exactly what we've achieved through the deployment of this solution. So the job isn't done. And that's the great thing about continuous improvement, is that there's always ways to make it better. And that's now top of mind for the teams that are working on this stuff. First and foremost, we're going to continue to refine the data that gets sent into the tool so that Dorothy's analytics team can model at a more granular level. So one example of that is, rather than indicating yes or no to whether certain components of the vehicle are damaged, we're now integrating, and we have integrated at this point, more granular detail about the degree of damage on a per component basis for the vehicle. As the model gets to know that information and as it reaches critical mass, it's going to allow our predictions to get that much better. We're going to continue to extend into a broader range of vehicles that we can run the tool on. So some vehicles at this moment are out of scope for calculation or prediction by the tool. So doing more in the space of commercial vehicles or lifestyle type vehicles, ATVs and snowmobiles and mopeds and whatever else is out there in the policyholder's hands, we want to make sure that we're applying the same sort of techniques to get a lot smarter about making total loss versus repairable decisions across all of those vehicles. And then we're going to continue our rollout across the country. At this point, we are fairly embedded across most of Canada. There are pockets where we still have a little bit of work to do to get it either deployed or adopted and working better for us. The other thing to note is that this represents a tremendous win in the total loss flow. But as Daryl said at the beginning, it's 1 in 5 auto claims. So the other 4 are also getting a lot of love and attention. We've spent a great deal of time on improving our channels for customers to report their claims to us. So how that first notification of loss gets to us. We've done a lot of work, as you can see here, and a few other things around the total loss flow. The repairable flow is also one that is deserving of some attention, and you should see some exciting new stuff coming from Aviva around the repairable flow, both for adjusters and for customers. So with that, we're about halfway into our time, and we wanted to give lots of time for questions and answers. So Doug, if I can turn it back to you.
Certainly. Thank you very much, Jonathan, and for Dorothy and Daryl as well. That was fascinating. I was sorry now that I missed it at our conference, but you've just made up for it. So that's great. And I get more opportunity here to ask questions. I'm going to start with something that continues on from an event that you participated in last year, Jonathan, and that was the webinar and also a session at the technology conference a year ago, which was the integration of information coming in digitally from the collision reporting centers into your system and triggering a customer response back to them directly. And there were a couple of questions I had around that. Does this function automatically integrate with what comes from, as a first notice of loss, from the collision reporting centers? Or it sounds to me like there's that step there with the adjuster to go through a piece of that. Is there a linkage? Is there a potential linkage if there isn't, kind of question?
It generates a slightly different flow. The tool is absolutely accessible. I would say that for an adjuster walking a customer through first notification of loss via a phone call, it's a seamless bit of the process that's incorporated right into the new claim wizard that the adjuster works through during the course of that phone call. If a claim gets to us either from our online reporting tool, our email capability with integration into Claim Center, or it comes from one of our integrated partners like the Collision Reporting Center, and it creates the claim automatically, we're already past the point of the first notice of loss wizard, where the adjuster would normally take the customer through that. But the ability to go to the damage description panel in the vehicle incident is always there and always available to the adjuster. So as part of their pre-work, before they make the outbound customer call to follow up on the claim, they will have executed that call to the total loss prediction tool. And then the outcomes of that will be available to them as they make that outbound call to the customer to talk about next steps.
Right. Wow, that's impressive. Last year, again, follow on a couple more questions maybe from there. One of the points of the first notice of loss coming in from your partners, et cetera, was that a text or email message could go out to the claimant, customer, and could very well carry the name of the adjuster who's been assigned, et cetera. That then gave them a contact point. So this then integrates very nicely, I think, unless I'm wrong, between that adjuster calling the customer with that next contact, and he then knows a whole lot more, obviously, because he's been through the damage estimate, et cetera. So anything there that I'm missing, or did I interpret that correctly?
No, you interpreted it correctly. I think the solution that we put in place for customer notifications essentially creates triggered automated events through the life cycle of the entire claim, right from first notification of loss and the assignment of the adjuster all the way through other points like the determination of total loss, the determination of liability and what's going to happen with the deductible, messages around rental car and repair shop selection. All of those points generate messages to the customer. What's interesting is that a solution like this one, where we're accelerating the pace and life cycle of the claim so much, is that we may find that in some of our accelerated total loss workflows, we may want to withhold some of the messages that we might otherwise have sent to keep a customer proactively informed about the progress of their claim. If so many of the steps are getting ticked off right on the first notification of loss call, we maybe don't even need some of them anymore. So it's a good problem to have, but we know that not all claims are going to come through this process. There are circumstances where it doesn't apply or it shouldn't be applied. And there are also other circumstances that may prevent it from being applied. So, we still need all of the notifications that we've designed for the standard flow of a claim. But for the accelerated ones, it is an opportunity for us to optimize and make sure that we're only delivering to the customer the messages that they really need.
Cool, that's great. A question coming in from Chucks. He asks, does this solution support low and high value claims? Did you start with the common vehicle types, et cetera, and you did say that you would get to the more esoteric ones later. His was more specifically about low and high value claims.
Yeah, I'll turn the core question over to Dorothy. I think from a predictive solutioning perspective, if we wanted a predictive model on Lamborghini total loss versus repairable, you need enough data in your system to train off of in order to have confidence in predictability. But Dorothy, do you want to expand on that?
Sure. So what Jonathan said is correct. So we do have a high volume of claims to build our machine learning models on for a certain type of vehicle. But when you get to the luxury vehicles and some of those high value vehicles, we don't necessarily have enough data points to be extremely accurate. So for the time being, we've given that caution to our claims team. We set a certain threshold at which point, our confidence is lower. And so we've recommended, at least for the time being, that we work underneath that threshold in terms of vehicle value. The tool can predict those. It's just not quite as good at it, just because of the lower number of data points in that and for those vehicles.
Got it. Okay. We also have a question from Rich asking if you would talk a little bit about the workflow changes you implemented to leverage the tool effectively. I think some of those are inherent in the comments, but could you expand on that a little bit? And I'm not sure who's the most appropriate person to do that.
I think that's a question.
Yeah, I can take this one. So yeah, we did have to implement workflow changes, and we were lucky in this instance that our technology and Guidewire allowed us to set up a pilot team where they could test these claims live, understand what the impact was to the workflow, and try out different things before we rolled it out across 200 odd adjusters across the country. But of the adjusters and getting them comfortable with what does a conversation look like when you're going to tell somebody during the report of their accident that their vehicle is a total loss. And then how do we value that vehicle effectively at that time? So not only do we get this tool in place, we also worked on another tool to get live values or as close to real-time values on a vehicle as possible. And that involved working with our appraisal team, getting appraisers off the road and into the office, sitting side by side with adjusters to upskill them, but also answer questions and value vehicles in real time. And there's a number of different changes that we'd have to go through and that we're still going through. We're still learning and I think that's the beauty of what we do at Aviva, is that we don't just stop. We'll continue to learn, and there'll be things that will work, and there's things that don't work. We learn from them, and then we change. So that's kind of what we had to do. And I hope that answered your question.
A good ongoing approach to innovation. Try it, like it, change it. If it doesn't work, all those sorts of things. So good. A question from Goran, who asks, what do you see in terms of impact on your loss ratio? Or in other words, how does machine learning prediction compare to human adjuster in terms of quality?
I mean, I guess there would be a perspective, Dorothy, from your side, and Daryl also from yours, in terms of practical at the desk work. What's interesting is we have to compare the accuracy of the prediction and the resulting cost differential with the added difference in terms of time. So what we save in time, is it okay that we don't get it as perfect? So maybe I'll give it to Dorothy first to talk about maybe some of the variants that we're seeing. How many did we call total loss that end up coming back to us as repairable, and how many did we say were repairable that end up at the end of the day getting total loss, and are we happy with that?
So I think when we look at how the tool is currently performing and how many false positives and false negatives we're seeing, if we look at, I think there's a question further down, so I can answer this question at the same time. If we look at the metrics of precision recall and accuracy for the model itself, we're looking at a recall of about, let's say, 65%. That's a rounded number, but what that means from a recall perspective is, of all the total losses out there, we're catching about 65% of them. So that's actually extremely good in comparison to our previous abilities with the human adjusters that we had in place. We're probably doing about 50% or 100% better in that case of being able to, at the first notice of loss, be able to predict a total loss, which I think is fantastic. It doesn't mean that we don't necessarily have false positives in place. We also had false positives with our previous tool that we were using, but right now we're doing considerably better. So when we look at our false discovery rate or our false positive rate, at the current time we have about 12% of what we're predicting is perhaps a false positive, but because of the other processes that we have put in place around that, it doesn't mean that we're losing as a business in those cases. We have our adjusters take a look at those. We go through the repair process in those cases, and we're able to flag and mitigate those risks. In the case of situations where we haven't correctly predicted a total loss, we also fall back to our existing process, which still, we do our due diligence in understanding what has happened. We understand if we've predicted a total loss, what the costs around that, the savings around that are. And when you add up the savings in rental fees, storage fees, the increased reduction in salvage that we might receive, at the end of the day, as a business, we've made the decision that the costs are low, and the benefits highly outweigh those costs in the end.
Daryl, do you want to add anything to that, or?
No, I think Dorothy nailed it down, and I think it's just clear, like she said, is in order to mitigate some of the risks, is all these vehicles in the end get viewed by an appraiser, whether the tool deeds them a total loss or not, which helps us just to understand not only the performance of the tool, but also mitigate any exposure we have when there is a false positive or a false negative, and we get them back on track as quickly as possible. That doesn't mean that we haven't paid out total losses that probably were repairable, but we're willing to live with that risk. And I think you had a question in there about loss ratio, but this is having a positive impact on loss ratio. mainly due to the decrease in cycle time. That's where you get the significant savings on it.
And there are also some eagle eye buyers who shop the salvages at impact, and when they see a repairable vehicle come up, we do get a little bit more in terms of salvage value out of that auction.
Exactly.
So it also buffers a little bit there where we call a repairable a total loss.
Gotcha. I hope that answered the question from Jinhong as well. If not, could you put in a supplementary question? And I think, did I see something pop up there from Jonathan? Oh, maybe not. How do you go about keeping up to date with evolving inputs into the model, such as certain repair costs changing as technology changes, et cetera, et cetera? I'm supposing that may mean something behind the scenes in terms of repairability databases or repair costs and expenses and all those sorts of things. Anyone care to tackle that
I
question?
can answer that. So I think the reality is that this isn't something where we create one model and we leave it at that. I think it's something that we need to revisit on a regular basis. Our hope is that quarterly we can continue to refresh the model so that as months go on, we continue to put in place a model that can account for some of those repair cost changes. In terms of technology changes, we continue to have plans to do better. We want to, as Jonathan described in the presentation, there's a number of initiatives we want to put in place to make our predictability better. And so we will continue over time as we refresh the models to enhance the data that we put in, the data that we actually acquire from our claims adjusters and from our vehicle claims so that we can continue to improve this process.
Great. Thank you, Dorothy. We have a question around fraud from Juan Carlos. Have you tried to extend capabilities into fraud analytics? In other words, it's well known in the industry there could be collusions between body shops, claimants, and sometimes even adjusters. No kidding. How do you make sure that increased speed in processing doesn't open a window for fraud? Or maybe you put it the other way around and say, does it even perhaps decrease that opportunity?
Right. Yeah, so certainly a valid concern. I think everybody in the industry is aware of and careful around the topics of fraud. The best answer that I can give is that right now the total loss tool is an adjuster-led process. So there is that human barrier to opening the door fully to more opportunity for fraud. We are keen on ensuring that window, as is said in the question, is closed as much as possible. So the team Dorothy's team that has worked with us on the total loss analytics, there is ongoing consultation on a number of applications of analytics in the claim lifecycle. Fraud is certainly one of them. We are looking at extending our capabilities in real-time fraud detection through a mix of buying and building, as the case may be. It is a prerequisite before we put more of the auto claim journey into a customer self-service model. So right now, our self-service extends as far as reporting the claim and gathering some key data around the events and the damage and all of that. As of right now, without being tighter on that fraud detection capability, we don't intend to give full control of the process. Now, with a faster decision point, with a faster life cycle overall, is there an increased risk that fraud will slip through the cracks before we have a chance to catch it? Yes, there is that risk. I think the measures that we do have in place are strong and continuing to get stronger every day. But yes, with a faster process, there is an increased risk.
Any other comments around that particular point?
So I could add to that. We are actively working on fraud solutions for both what you've described here, which is understanding the collusions between some of these organizations, these vendors, but also in building another service, an API service that could be used within the total loss process to be able to look for instances of fraud or individuals that have been fraudulent during the same time. So we want to be able to integrate that with ethanol. We're currently in the process of working on that. And we do hope to be able to have it as part of this process this year.
Great. One of the comments or process steps, I think, last year from the collision reporting center reporting to you folks was around images available with the submission or shortly subsequent to that. And there's certainly been a lot of industry discussion, maybe from the industry collision guys mostly, but around image analysis, looking at photos of the damage and being able to estimate from that. Is that part of this process? Could that be part of this process? Do you see an advantage there or not, kind of scenario?
Yeah, so I'll start by saying any data we can get our hands on is good, whether that data is text in fields or that data is an image or a video. It will help. What I think is relatively achievable for us in the near term is using photographic damage evidence to corroborate a prediction or to add confidence to a prediction that the model has generated. Going forward, as the technology continues to evolve, there is opportunity to do some of the work or shift some of the work from being data dependent to being derivable from imagery. I don't necessarily think we're 100% of the way there yet. There are certainly some criteria that are plainly evident in an image that would be a no-brainer from a total loss determination perspective. But those cases where it's so cut and dry, you don't even need the photo. If somebody tells you that their car is at the bottom of the swimming pool in the backyard, you pretty much know that it's total loss. So, you know, I do think that there's opportunity to incorporate and to go for one of the sort of an and solution as opposed to an or, where we can use what is possible in image processing and image analytics to augment or support what's being done from a machine learning and predictive modeling perspective.
Okay. Sorry, back to a question that that Jin Hong asked a little while ago, and you mentioned and discussed. He said, is the mentioned recall 65% from real data or from training data? Just seeking some clarification on that point.
So our training data and our real data numbers are quite close. So what I was referring to earlier was based on what we're actually seeing now that we've deployed the tool. We are seeing quite accurate numbers in comparison to what we trained with, and sometimes actually better. So that recall number is pretty close. It might be a little bit lower in our training data, a little bit higher in real life, but it is basically based on our real analysis of what's actually happening now that the tool's in place.
And that would certainly be the kind of thing that you would like to see, right?
That's right, yeah.
From Stephen, we have a question, a series of questions actually. Does this negate the need for a traditional line item estimate when a total loss is indicated? And do you expect this process to increase or decrease your total loss ratio going forward?
I can take this one. So we do still do a traditional line item estimate when total loss is indicated. We still do view the vehicle, take photos, and write an estimate on those vehicles at our salvage yard. And then, do we expect this process to increase or decrease your total loss ratio going forward? We've actually seen it slightly increase our total loss ratio, not in any kind of significant way, but it starts to remove some of the bias from an appraisal perspective. So that has happened. And again, it's looking at it holistically from a customer, and we'll take the customer steer on ones that are borderline. Traditionally, some of those borderline ones may have got repaired and we're total lossing them now. But if the customer really wants it to be repaired, we'll work with them to get it repaired, because there's times where, for instance, a 1999 Honda Civic, the tool is going to tell you it's a total loss with $1,000 worth of damage, but we may be able to repair that for the customer, and let's work with the customer on what's the best outcome for them. So that vehicle may be worth more to them than us cutting them a check for $1,000.
Right. A first love, pristine condition, whatever, never going to let it go.
Exactly.
All those kind of things. Yes, I had a cousin who was in that mode with his first car. I think it rusted away in the backyard at some point, but we won't go there. Steve also asked if you've integrated your actual cash value information provider data into Guidewire and this process.
So, and I'll let Jonathan speak to part of it, but we're in the process of doing that, but we really rely on the expertise of our appraisal team. So I think I mentioned it before, but traditionally appraisers are on the road in an auto claims environment, and you may have one or two in-house. We've actually brought a bunch of them in-house to support the adjusters. They sit side by side with the adjusters, and we get real live valuations, but they also then use their expertise to make adjustments either up or down on that based on their knowledge. So we will integrate that into Guidewire, but we'll still rely on the expertise of our appraisers to support the adjusting team in getting the best valuation for our customers.
Wow. Okay.
Dorothy, were you going to add something to that based on historical settlements and things like that?
I was just going to say that we do use that information from historical settlements in the machine learning process. So it's definitely an important piece of information for us to make sure that we're making the accurate prediction on our side.
Yeah, and I would just add that all of that is subject to adjustments based on the condition and the mileage of the vehicle. So, you know, even the best data is going to be somewhat generic or aggregated, and we have to make sure that we're making it personal and appropriate and applicable to each customer.
Stephen also asks about the Collision Reporting Center. Stephen, if you send me a note, I'll point you at our webinar from a year ago that goes through the whole Collision Reporting Center and how it is interfacing with Aviva for those kind of details. But there was a question that I don't believe the folks there had done a year ago. They were also looking at doing at least a first cut at total loss identification. Is that something you receive from them at Aviva, or even if you do, it doesn't matter, you could do your own analysis anyway, I would assume.
The easy answer is sort of.
Okay.
What's nice about the integration that we have with the Collision Reporting Center is that it is flexible and under the same sort of continuous improvement paradigm as our total loss solution. So we're constantly incorporating different or new capabilities or mapping in of data that the Collision Reporting Center collects. A great example is we've recently worked on incorporating an injury flag for first party and third party injury that is reported as part of reporting the claim at the Collision Reporting Center, to incorporate that into our first notice of loss integration and use that to inform our internal accident benefits and casualty teams that there's injury on the file. And we know that generally speaking, reporting lag on injury leads to increased cost of claims. So the earlier we know, the better outcomes for everybody. So again, it's another aspect of continuous improvement that we're taking in stride.
And I suppose that if that flag isn't turned on, in other words, there's no report of bodily injury on that first notice of loss, if you get one later, that probably increases the red flag probability a little bit higher?
It could.
I do. And Stephen's final question here, at least, was around payment out to your claimants. Do you do that electronically?
We do prefer EFT. We do have EFT capability. That's ACH elsewhere. We've had that capability for a while. We are working on improving our payment capabilities to make it even easier for customers. Oh, so stay tuned on that.
Yeah. Well, I think by and large, isn't isn't that one of the advantages we in Canada have had over some other jurisdictions, is the ability to do a lot more banking and paying processes, et cetera, digitally than some other places have had. And I think we're
Yes.
probably a little bit behind some in Europe too, but I don't know that at all for sure. So
I will guarantee it.
okay.
But yes, I mean, we still struggle with many of the co-payable situations that still, in many cases, demand a check. But we're working on it.
Okay, great. We have another question from Sam a question from Sam who asks about the electronic data available in the black box, data recording devices, telematics data, et cetera. Is there any work happening in that space that would fit along beside this, or separately from, or integrated into?
So I could just briefly speak on that. So we are currently running a POC with telematics to get a better understanding of what would be the best way to use that data, whether it be for the solution or for some other things that we're doing at Aviva. So it is something we're experimenting with.
Yeah, and I think in addition to that, I would only add that from a speculative perspective, looking at, should we get to a point where the technology is actually reporting the claim, what would we want it to tell us? So that's a little bit further out, but on the horizon.
A connected world, to say the least.
Indeed.
Okay, I had some other questions, but I see that we're pretty much out of time. Dorothy, you got off lightly. I didn't have to ask you about your role and the 600 data scientists you have at Aviva worldwide, all that sort of thing. So at this point, I would like to bring our event to a close. So thank you ever so much, Jonathan, Dorothy, and Daryl. You've been wonderful, not only at presenting the particular case that you presented to us, but also in bringing forth your experience in the discussion, the answers to the questions, and so on and so forth. To me, it's a great example of technology in action, and having the ability to then translate technology out there that might be a hammer looking for a nail, that you have found lots of nails to hammer away at. We do appreciate your willingness to share the information that you've done today. Thank you also to those who are attending and to those who watch the recording in future. We will be sending a note in the next day or so with directions for you to see how to see the recording, where to see it, etc., so that you can look at it again if you wish, or share it with someone else. If you have any comments as people attending today about the webinar or about how we promoted it, we do try and reflect accurately what the content will be. So if you have any suggestions or requests about future webinars or for content of those, we'd certainly welcome those as well. So have a good rest of the day. To all of you, keep your distance, stay safe, be healthy, and reach out to others in this terrifying COVID-19 pandemic. We can all help plank the curve, be part of the solution. Thanks again to the folks from Aviva, and goodbye for now.